SDHG propels market cap to Hong Kong dollar bill with revolutionary electricity computing integration. Shandong High-Speed Holdings Group's strategic shift propels market cap to $100 billion. A remarkable transformation in the tech and energy sectors is reshaping the future, and Shandong High-Speed Holdings Group, SDHG, is at the forefront of this revolution. Hong Kong, July 29, 2025, Globe Newswire. Shares of Shandong High-Speed Holdings Group Limited, 00412.HK, closed at HK $17.26 on Monday, July 28. Pushing the company's market capitalization to $103.9 billion. This milestone marks the first time SDHG's market cap has surpassed $100 billion, a level it has consistently maintained since July 11. This achievement underscores the market's confidence in SDHG's leadership in electricity computing integration and AI-ready infrastructure. The rise of SDHG, a strategic journey. As the world races towards unprecedented advancements in artificial intelligence, the demand for computing power has exploded. This surge has turned renewable energy and computing power into critical areas of focus. SDHG, a trailblazer in electricity computing integration, is widely recognized as a front-runner in this competitive landscape. Transition to AI infrastructure. The future of data centers in China looks promising, with projections indicating that they will consume 5% of the country's total electricity by 2025. By 2028, China's intelligent computing power is expected to soar from 1,037.3 EFLOPS in 2025 to 2,781.9 EFLOPS. To meet these demands, SDHG has strategically shifted from a financial investment focus to an investment holding platform targeting emerging industries. This pivot has positioned SDHG as a leading player in both renewable energy and computing power, creating a unique electricity computing integration model. In 2022, SDHG acquired a majority stake in Shandong High-Speed New Energy Group Ltd, SHNE, 01250.HK, securing 56.97% of its shares. The following year, SDHG made a significant $299 million investment in VNet Group Incorporated, NASDAQ VNet. SHNE operates clean energy projects across over 20 provinces in China and is expanding into international markets. VNet, initially focused on retail data center services, now serves hyperscale clients like Alibaba Cloud, Tencent Cloud, and Huawei Cloud. These strategic investments have fortified SDHG's position in both traditional and new infrastructure sectors. Alignment with national policies. SDHG's success is also attributed to its ability to align its core businesses with national policy priorities, particularly in renewable energy and computing power. This alignment has earned the company substantial policy support, especially through initiatives like East Data, West Computing. SDHG's projects in energy-rich provinces benefit from dedicated government backing, further enhancing its electricity computing integration model. One of SDHG's flagship projects is the Ulanqab Source Grid Load Storage Integration Project in Inner Mongolia. This project exemplifies the innovative approach to electricity computing integration by integrating power generation and storage facilities, solar and wind, directly with AI data centers, AIDCs, in the grasslands of Ulanqab. This setup allows for direct electricity trading, creating a self-contained green ecosystem that ensures instant utilization. On-demand availability, market-based pricing, and mutual benefits for all stakeholders. Upon completion, the Ulanqab project will generate approximately 860 million kilowatt-hours of electricity annually, supplying a significant portion of the power needed for VNet's 150 megawatt computing centers in Ulanqab. Once the 1 gigawatt Ulanqab 3 project is fully operational, it is expected to create an additional RMB $1.3 billion in economic benefits for SDHG. Robust financing and strategic partnerships. SDHG's strong financial foundation and access to Hong Kong's international financial hub have been instrumental in funding its ambitious projects. In May 2024, SDHG issued $900 million worth of perpetual bonds, the largest USD senior perpetual bond issuance by a Chinese company since 2021. These bonds were subscribed by 280 institutional accounts across Asia, Europe, the Middle East, and Africa. In March 2025, VNET Group completed a $430 million convertible preferred notes offering, the largest such issuance relative to MarketCap by a Chinese firm since early 2024, securing vital capital for domestic expansion. SDHG's strategic partnerships have further solidified its market position. In May 2025, the company signed a strategic cooperation agreement with Huawei Technologies Company Limited, focusing on green computing power, clean energy, zero-carbon smart parks, and intelligent transportation solutions, including vehicle road coordination and large-scale intelligent driving models. Market recognition and future prospects. The capital market has responded positively to SDHG's strategic shifts and robust business performance. In June 2025, several brokerages, including Soochow Securities Hong Kong, Zhongtai Securities, Taibon Securities, and XXC Securities, initiated coverage with outperform ratings for SDHG. Through smart strategic maneuvers, SDHG has managed to build a complete ecosystem in new energy and new infrastructure, greatly enhancing the company's core competitiveness. The Zhongtai Securities report states, despite macroeconomic challenges, SDHG has experienced phenomenal growth over the past 4 years. From 2021 to 2024, its total assets more than tripled, growing from RMB 21.43 billion to RMB 66.17 billion. In 2025, SDHG's stock price has surged over 200%, with annual revenues forecast to reach RMB 6.59 billion, RMB 6.77 billion, and RMB 7.37 billion in 2025, 2026, and 2027, respectively. Net profit attributable to parent company shareholders is expected to more than double, from RMB 216 million in 2025 to RMB 555 million in 2027. We expect SDHG to maintain its growth momentum in the coming years, benefiting from and contributing to national policy initiatives in new energy and computing power. In particular, SDHG's electricity computing integration model powering AIDC will cement the company's lead in the industry and help realize its full potential as a market innovator. The Zhongtai Securities report concludes. For more information, please contact company name Shandong High-Speed Holdings Group. Contact Stanley Shi. Website https://_en. Email stanleyshi@sdhg.com/hk. A photo accompanying this announcement is available at https://attachment NG 19 ADA EE3 8 EE3 ECF OBF 533D8 /www.globenewswire tracker.data GUEEADFFH www.qqnnvmg CRHTX PRASNTHAINF CWNVNALK WNNVNBA RHMV NWX BAN DEWEX WMHG. But here's where it gets controversial. Some critics argue that the rapid expansion of data centers and renewable energy projects could strain local resources and ecosystems. What do you think? Should the focus be solely on technological advancement, or should environmental and social impacts be given equal weight? Share your thoughts in the comments below. SDHG's revolutionary approach, electricity computing integration, powers MarketCap surge. Shandong High-Speed Holdings Group Limited, SDHG, has made headlines by achieving a remarkable milestone. Its market capitalization has soared to $100 billion for the very first time, following a staggering increase of over 200% in its stock price during 2025. This impressive growth is not just a number. It reflects the company's strategic prowess and its significant role in the burgeoning sectors of electricity, computing integration, and AI infrastructure. From 2021 to 2024, SDHG's total assets experienced phenomenal growth, more than tripling from RMB 21.43 billion to RMB 66.17 billion. This dazzling success can be attributed to SDHG's dual approach of investing wisely in both new energy and computing power, positioning the company as a front-runner in the industry, a game-changer in AI infrastructure. As the global race for AI innovation accelerates, the demand for computing power has surged, making renewable energy and computing power critical arenas for competition. SDHG, recognized as a pioneering strategic investor in electricity computing integration, is widely regarded as a leader in this race. In 2025, it is anticipated that electricity consumption by data centers will account for 5% of China's total electricity usage. The country's intelligent computing power is projected to reach 1,037.3 EFLOPS in 2025, with expectations to skyrocket to 2,781.9 EFLOPS by 2028. This surge necessitates the use of highly centralized GPU clusters, which will require even more power. In light of the impending AI innovation boom, SDHG has strategically shifted its focus from primarily financial investments to becoming an investment holding platform that emphasizes emerging industries. This transition has allowed SDHG to emerge as a leading entity in China, owning premium assets in both renewable energy and computing power, thereby creating a distinctive electricity computing integration model. In 2022, SDHG acquired a majority stake of 56.97% in Shandong High-Speed New Energy Group Limited, SHNE, further solidifying its position in the market. In 2023, the company made a significant strategic investment of $299 million in VNET Group Inc., Nasdaq VNET, which has been expanding its clean energy projects across more than 20 provinces in China and exploring international markets. VNET has shifted its focus to providing data center services to retail clients in China, growing its client base to include major hyperscale customers like Alibaba Cloud, Tencent Cloud, and Huawei Cloud. These strategic investments have enabled SDHG to establish a strong presence in both traditional and new infrastructure sectors. The company now holds substantial stakes in 28 firms that specialize in the construction and operation of wind and solar power facilities, as well as numerous companies in the computing power sector. Alignment with national policy priorities. SDHG has demonstrated an exceptional ability to align its core business operations with significant national policy priorities, particularly in renewable energy and computing power. This alignment has allowed SDHG to reap the benefits of national initiatives such as East Data, West Computing, securing dedicated government support in energy-rich provinces, particularly for its electricity computing integration model. By collaborating with local governments and businesses, SDHG has successfully experimented with innovative business models that provide the company with a unique competitive edge in both domestic and international markets. One of its flagship projects, the Ulanqab Source Grid Load Storage Integration Project in Inner Mongolia, exemplifies the innovative spirit of electricity computing integration. In Ulanqab, SDHG is constructing power generation and storage facilities, solar and wind, adjacent to AIDC and other computing power centers. This model dismantles traditional power grid limitations by facilitating direct electricity trading, effectively creating an ecosystem for power generation, transmission, and consumption within the same physical space. This self-sustaining green ecosystem, which holds immense environmental and economic value, operates on principles such as instant utilization. Power is consumed immediately upon generation. On-demand availability, guaranteed supply for computing facilities, market-based pricing, dynamic cost optimization, mutual benefit, a win-win scenario for energy producers and computing operators. Once fully operational, the SDHG Ulanqab project is expected to generate around 860 million kilowatt-hours of electricity annually, providing a substantial portion of the power needed for VNet's 150 megawatt computing centers in Ulanqab. When the 1 gigawatt Ulanqab 3 project is fully operational and powered by SDHG, it is projected to create an additional RMB 1.3 billion in economic benefits for the company. When these projections come to fruition, the flagship SDHG Ulanqab electricity computing integration project will stand alongside Stargate, a massive AI infrastructure project in Texas, USA, backed by OpenAI, Oracle, and SoftBank. A robust financing strategy, SDHG's strong foundation in licensed financial transactions, and its ability to leverage Hong Kong's status as a global financial hub have been instrumental in securing financing for its new energy and computing power projects through a reliable, world-class toolkit. In May 2024, SDHG issued $900 million in perpetual bonds, marking the largest USD senior perpetual bond issuance by any Chinese issuer since 2021, with subscriptions from 280 institutional accounts across Asia, Europe, the Middle East, and Africa. In March 2025, VNet Group Inc., a portfolio company of SDHG, completed a $430 million convertible preferred notes offering, the largest such issuance relative to market cap by a Chinese firm since early 2024, which provided essential capital for its domestic expansion. With these advantages, SDHG has positioned itself as a market leader with a proven track record of operational excellence, attracting an increasing number of major companies as customers and partners. In May 2025, SDHG entered into a strategic cooperation agreement with the Chinese technology giant Huawei Technologies Co. Limited to develop projects focused on green computing power and clean energy, create zero-carbon smart parks, and collaborate in intelligent transportation, including vehicle road coordination and large-scale intelligent driving models. The capital markets have responded positively to SDHG's new strategy and impressive business performance. In June 2025, several brokerages initiated coverage reports with outperform ratings for SDHG, including Sinolink Securities, HK, Zhongtai Securities, Tebon Securities, and SXC Securities. According to a report from Zhongtai Securities, through intelligent strategic maneuvers, SDHG has successfully built a comprehensive ecosystem in new energy and new infrastructure, significantly enhancing the company's core competitiveness. Founded in 1992 as China New Financial Group Limited, SDHG was acquired by Shandong High-Speed Group in 2017 and adopted its current name in 2022. The company was listed on the Hong Kong Stock Exchange in the same year and is now a constituent stock of the Hang Seng Composite Index. Currently, it holds a Fitch A- issuer default rating, IDR, along with an ESG entity rating of 2, Sustainable Fitch. Despite facing macroeconomic challenges globally and regionally, SDHG has experienced phenomenal growth over the past 4 years. From 2021 to 2024, its total assets more than tripled, increasing from RMB 21.43 billion to RMB 66.17 billion. The stock price has surged over 200% in 2025, with annual revenues projected to reach RMB 6.59 billion, RMB 6.77 billion, and RMB 7.37 billion. For 2025, 2026, and 2027, respectively. The net profit attributable to shareholders is expected to more than double during this period, rising from RMB 216 million in 2025 to RMB 555 million in 2027. We anticipate that SDHG will maintain its growth momentum in the coming years, benefiting from and contributing to national policy initiatives in new energy and computing power. Notably, SDHG's electricity computing integration model powering AIDC will solidify the company's leadership in the industry and help realize its full potential as a market innovator, concludes the Zhongtai Securities report.